All right, getting ready. So exciting. We've got a good show, and here we go. Everything is all set. Welcome, everyone. I'm Mitch Goldberg. You're watching your post market show. It's called Be the Boss of Your Money. It's all about making you the boss of your money. We cover personal finance, investing strategy, life cycles, financial planning. When I say life cycles, like life cycles, depending on your stage of life, what your plan should be, what changes financially you should be making with your investments, with your plans, etc. We cover all of these things right here on Be the Boss of Your Money. So you could, again, be the boss. So without further ado, we're going to talk about what I think could be new leadership. Could, but maybe we need new leadership. Maybe it's okay for a little while if we don't rely on the mega cap tech stocks as much as we've been, because there's a new leadership group in town, I think. I think it's called the bank stocks. So we're going to talk about that. Their earnings came out today, and a few things to take a look at, but I want to show you a really important chart. So here we go, and we're going to start the show. Where's my intro? All right. I cannot wait. If you have any questions, please ask me in the comments. You know, I love hearing from you. It's the best part about this whole thing. While you're watching this, if you give it a heart, a thumbs up, celebrate, whatever, you could, whatever reaction you have, depending on the platform that you're watching this. We're on LinkedIn, we're on Facebook, and we are on YouTube. I'll see who you are, and it always gives me more encouragement and enthusiasm to keep going. So here we go. All right, we're back, and we are working the controls to bring you a great all-around show. And I want to talk to you today about a couple of things. First of all, the market had a big rally. The major averages, the S&P and the Dow are off literally just 2% from their highs, and Nasdaq off 4% from its high. So after all is said and done, I always say we need to keep a cool hand. Don't overreact, don't underreact. Make your changes gradually. Be thoughtful about what you do. And here we are. You know what? Things aren't so bad. We're having a good week. Does this last? We had a nice day today in the market. Does it last? Does it go? Does the market go back down tomorrow? Or have we seen the near-term bottom? We had a 6% pullback in the major averages. And, does that last, or should I say, is that past us, or do we go back down and retest those lows from last week? It doesn't really matter. And I don't really have an answer for you. I don't want to speculate on an answer. This is short-term thinking. I am just buying what I think are great American companies or exchange-traded funds, that sort of thing. And I am practicing good personal finance. I'm going to trust the process, my strategies that I bring to my clients as well as myself. And I'll surrender the outcome, because that's what it takes. Don't try to manipulate things too much. It doesn't work. It often backfires. So let's talk about a couple of things. Hey, you know what? Hit me up with your questions, and we're going to talk about a couple of things. But in the meantime, yesterday's thumbnail for the show. Did I have one yesterday? Here it is. Yesterday I wrote, "It's not you. This market is really tricky." Let's talk about a few things you could do now. Didn't feel like we finished up on what we could do. So we're going to talk about that a little, bring some personal finance and some smart investing and financial strategy into the show. And while you're watching this, let me know how I'm coming out to you. Do I sound good? I changed the positioning of my mic a little bit. I like it. I mean, when I speak now, like, I feel like I'm getting a little bit better of a quality sound. Like, I actually turned the volume down on my headphones, and I still hear myself just as loud. And it was a positioning thing that I got from Antoinette Biordi at News 12. She was actually in my office. She sat right here in the seat, checked out my whole setup here, and she was really impressed, and I was really happy about that. That's kind of cool when somebody comes in who's a professional broadcaster, a reporter, and tells you, "Wow, your setup is awesome." So Kudos to you, Antoinette. Anyway, it's a tricky market. It is a very tricky market. How tricky is it? Well, if I had to say it's tricky, this is how I would describe it.
It's tricky. It's tricky.
I'm such a freaking tool. And Natalie, while you're watching this, you're rolling your eyes, laughing out loud, saying, my boss, Mitch, has really lost his mind. Yeah, maybe in a little bit, in a little way, but, always in touch with my inner creator. And, got to come up with those things to keep it fun. It's tricky. It's tricky. I mean, did you think you were going to catch a little Run DMC in the middle of the afternoon in 2021? That's old. That's going old school. All right, let's take a look at the market, how things did, and I'll pop myself up on the screen. So the Dow is up over 500 points. It's a great day. Congratulations, investors who hung in there. Now, depending on how you look at this, you have a higher price to sell and bail out, or you just say, you know what, things are going higher. It's a good buy. We're okay. Let's think long term. I don't think 500 up or down, it doesn't do anything for me, and it doesn't change a thing. NASDAQ, though, was up 1.7%. S&P was up 1.7%. Overall, it was a good day. Gold was up a drop. Still can't crack the $1,800 level. One day, gold will crack that level. I was thinking about gold. Should you own gold? And every now and then people ask me about gold if they, every now and then people ask me if they should buy some gold, put gold in their portfolio. My answer, I have two ways to go about this. It's like a flow chart. One side of the chart is, are you interested in buying gold as a trade? There's some technical indicators. People are worried about something happening in the world, a geopolitical event. So should you buy some gold? Let's say where it is now, 1798. Let's say around 1800, you're going to sell it at 2100. That's your plan. That's one thing. But if you believe gold is something that you should hold on to because one day it'll be a worthy investment, just like there are stocks you've bought that you said one day they'll prove to have been a worthy investment, and it happens. Look, if you bought stocks at the bottom of the bear market because of, during the initial phase of the pandemic, you'd be doing very well. You'd say, well, I'll buy stocks and one day I should do well. You could say that about any asset class, right? If that's what you're into it for, and you think gold should be a part of your portfolio, it doesn't matter whether or not you should buy gold now. It doesn't matter if I think gold goes up or down, or you think gold goes up and down or down over the short term. If you want to own gold because you think it's a valuable asset class that should be part of your asset allocation for the long term, then that changes the timing. Then, of course, you should buy gold now if that's the case. If you're looking for a technical trade, a breakout or something in the price of gold, that's a different story and probably a little bit more involved than what I want to get into right now. But that's my take on gold. Let's go on a little bit because I need to show you the VIX. I think this is one of the most important things we're going to take a look at today. The VIX closed at 1686, so a little under 17. Remember what I said? If we see the VIX go under 20, the market rallies. So the VIX went under 20. And what happened? What happened? I can't hear you. What happened? Yeah, the market went up. 20 is the magical number, the line in the sand between up and down markets over the near term. This is proven out over and over. It was 30, then it was 25. Now it's 20. VIX is solidly under 20. And it just goes to show you that a lot of investors could be worried, but the real money, the smart money, or at least the big money that controls the market, the institutional money, that money does not seem overly worried about some cataclysmic, catastrophic change in the market that takes the market down. The worry is just not there. And based on moves today in stocks like UPS and Walgreens Boots Alliance and bank stocks and Caterpillar, what are you worried about? That's what the VIX is is saying. Let's take a look at the Russell 2000. Well, the NASDAQ 100 was up 1.88%, but the Russell 2K was up 1.44%. Look, just today was just a good, solid day with a little something in it for everyone. I want to go to the next screen. So let me tell you some of the important things that are going on here. Okay, have you taken a look? We used to look at this all the time. This is the COVID tracker, the Johns Hopkins COVID map. It's not as dark as it used to be, and I'll tell you what, uh, COVID cases, COVID cases are plunging. New COVID cases are coming down. This is probably a little small to see on your screen. Let me see if I can make that a bit bigger. Okay. But here is the top 25 confirmed cases by county. And as you'd expect, LA, Maricopa, Miami, these are just big population centers. But on the top 25, I'm not really proud of this, but it's Suffolk County, which is the county that I live in and the county that I'm actually sitting in right now. My office is also in Suffolk. It's like I'm right on the border of Nassau and Suffolk. I'm in Melville, and Nassau County is here. So basically, Long Island is only made up of two counties, Nassau and Suffolk County, and both counties are in the top 25 in the country in new confirmed COVID cases. Way to go, neighbors! Way to effing go! Seriously, guys. I mean, I think we could do better. I think we could get more people vaccinated. We have more CVSs and Walgreens than probably any other part of the world. Like every corner has a CVS or Walgreens. There's no excuse for you not to go in and get your free COVID shot. And you could probably hit a 7-Eleven or Dunkin' Donuts while you're there because we have 7-Eleven and Dunkin' Donuts on every corner here as well. Okay. Just giving you a little bit of little local yokel update there. Okay. So far we got Ty is watching. Hey Ty. By the way, nice to see you. Congratulations on a recent acquisition that I heard about. I'm very proud of you and very happy for you. Josh is out there. That is awesome. Let's take a look at a few other things. Oh yeah, this is what I want to show you. By Jeff Cox over at CNBC. Actually, Jeff and I emailed each other today. That was cool. Actually, I emailed him and he replied. Thank you, Jeff. Jobless claims fall below 300,000 for the first time since the pandemic. Do you see that? I know we just had a labor report last Friday that was disappointing. We got like under 200,000 jobs, and the street was expecting about 475,000 jobs. It doesn't tell the story, though, because we lost 200,000 government jobs, including school jobs. But now that most schools are open, you'll probably see that improve very, very quickly. But that's something a lot of people like. People say, oh, I hate government jobs, or we shouldn't have so much government in our lives. But then when we lose the government jobs, we go, oh, that sucks. Unemployment is terrible. We're losing jobs. It's hard to have it both ways. Government jobs, whether if you like it or not, are a big part of the labor market. That'll improve. But what's showing you here is jobless claims fell. This is showing you that the private sector continues to improve, and it's improving fast because the COVID cases are coming down. COVID cases are like just falling off a cliff. This is like such good news because if you remember earlier this year, we got the economy gearing up to open up and everything was going to be great. And then the Delta came around and smashed it. Well, here we are again with a lot of pent up demand. So that is something that I think is pretty optimistic. Not so much optimistic necessarily for the overall market to go up or down, however you want to look at that, but optimistic in terms of where do we go in terms of, do we favor the reopening stocks, economically sensitive stocks like cyclical stocks, industrial companies, smokestack companies, consumer discretionary companies, or do we slide back into an economic malaise and maybe go back more into the tech stocks, work from home, stay at home stocks, and consumer staple stocks like Clorox and Campbell's Soup. Okay, so I think we're more of like reopening economically sensitive has taken over, and that is something over there. And let's take a look. We already did that screen. Jobless claims we went over. Now I want to show you the chart of the day. The chart of the day. Put this up in the screen. All right. I have to do that tricky thing one more time. Just humor me, okay? If you're just joining us, we're talking about how tricky the market is.
It's tricky. It's tricky, 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 tricky.
I just can't get that song out of my head. All right, so I know, such a tool. So this is the iShares US. Oh, let me show you what I'm looking at. This here is the a chart. The blue chart, the blue line is the I is a ticker symbol IAT. This is the regional bank ETF from iShares. And if you notice over here, this is the peak in 2007, right before the Great Recession. Banks plunged, went up, plunged, but look where it is now. It's a good deal higher now than it at its all-time high last time around. And if you see the other chart, I don't know if you can see this green, faint green line. This is XLF. That's the big exchange traded fund from State Street. It's called the Spiders ETF, S&P Depository Receipt. So XLF, it's a super popular, very heavily traded ETF that tracks the financial services sector. It's basically big banks. And that also has exceeded its former all-time high. And what I was thinking is I sent out a LinkedIn post about this. If we're not connected on LinkedIn, I'm Mitchell Goldberg on LinkedIn. If we're not connected there, definitely please connect with me there. I share so much educational content. There's nothing salesy. It's all I just blast out knowledge. I've been doing this for over 30 years, and I just love sharing the knowledge, man. I love doing that. We've got a comment out here. Who's out there? Keith Wilson. It's tricky. Keith, you know that song? That's like Your Time and My Time, Run DMC, right? That's like you and I were in college at the same time. So that we were definitely partying to that song at maybe at the same time. Okay. So thank you very much, Keith, for tuning in, man. I really appreciate that. So here's the way I'm going to describe this. Word to your mother. Word. Isn't that how you're supposed to say it? Word to your mama. Something like that. Okay. So we got to go. We got to move on. So, hey, oh my God. Bill Conkle is in the house. Bill, I'm thinking about you, man. I miss you. Maybe we could grab some coffee sometime. Just, shoot the breeze. We're practically neighbors. Starbucks, Dunkin', whatever you prefer. Oh, Gregory's Coffee in Melville. It's pretty good. It's not coffee I'm used to. It's very strong flavor, but they have a lot of seating, and it's a really nice place. Maybe we'll meet there. Bill, I'm going to reach out. Thank you for joining me. And let's move on. So we've got the XLF also exceeding its 2007 high. This took so long. It took like 14 years, okay, to break out. And this reminds me of when the NASDAQ peaked in 2000, and it took until like 2000, was it 15, right, to finally pass that 5,000 mark. And once it did, went to 15,000. I believe we are witnessing a similar trading. I believe we're witnessing a similar phenomenon to when the NASDAQ broke out. And if you take a look at this in here, this to me is the could have, should have, would have phase. Anyone who could have, would have, and should have sold bank stocks has done so by now. The sellers are out of the way. The buyers are firmly in control. This is what technical analysis is all about. This is technical analysis, and it doesn't happen necessarily in a vacuum, although it's a leading indicator, because we lead. Good idea. Awesome. Looking forward to it. And because, the technicals lead, and then what we want is for them to get confirmed by the fundamentals. And this is more or less what we have. So I'm going to go over here. I'm going to punch up a couple of quotes. BAC, that's Bank of America. JPM, that's JP Morgan. We'll throw in Citi. We'll throw in Morgan Stanley, and for good measure, or for bad measure, depending on how you want to look at that, we're going to throw in Wells Fargo. Okay. So let's just throw in Wells Fargo. It gets a little hot under the headset, by the way. Just let you know. So we're going to Bank of America. How do you, okay. What you're seeing now in the green is the aftermarket trading. It's up a penny in aftermarket trading, but it was up $1.93 today. It hit a new 52-week high. You see that yellow there? 52-week high on Bank of America. How long have we been waiting for Bank of America to, like, not just break 40, but solidly break 40? And here we are. So it was up $1.93, up 4.5% today. JP Morgan, which was down yesterday. I said to you yesterday, the last 4 quarters in a row before yesterday, when JP Morgan reported, was it the day before? Tuesday, before they reported, that it has gone down the last 4 quarters in a row in the days it reported. Yesterday, the day it reported was no exception, but here it is. We're up. Citigroup, we're up a little bit, but still an impressive move up. The stock is up a lot lately. Morgan Stanley had a phenomenal quarter, up 2.48%. And the only loser in the group, Wells Fargo. In fact, if it wasn't such a strong day, if it wasn't such a strong day for bank stocks, I think Wells Fargo would have been down a good deal more. Now, Wells Fargo had a decent earnings report, and they have some really good cylinders to fire on, but they are just stuck in this they're stuck in the regulators' crosshairs. It's the company. I don't know which company Elizabeth Warren hates more. Is it Wells Fargo or Facebook? But she hates them both, and she's going to pull in other people with her on the hate. And Wells Fargo, they had the scandal in 2016, the new account scandal, and they're still dealing with the ramifications of that. And this is why corporate ethics is such a big deal and taught in school. You're not supposed to open up accounts in people's names and ruin some people's credit scores and take, and do all the fugazi stuff that they did. In any event, Wells Fargo, I believe, will catch up. And the stock hasn't been bad in the last year either. But the other stocks are firing all cylinders. Bank of America, they own Merrill. Their wealth management division is hot. Deal making is super strong. Investment banking is super strong. Trading is super strong. These companies all these banks have a massive amount of deposits. Bank of America, the leader. And if interest rates go up, longer term rates go up, that is good for these companies because they start to make a little bit more money on their net interest margins. In other words, a bank pays you a little bit of money on your deposits, and what they don't pay you on is their profit, right? So they make a little bit of interest on deposits, and then they have to pay you a little bit, and they pay you nothing now. But if interest rates keep going up, that is great for banks. Citigroup, Morgan Stanley, firing in all cylinders. Again, these companies all have retail brokerages, wealth management, and they're all doing incredibly well. And their earnings have shown that. The next big one to come out, and the last of the super heavyweight financial center banks, is Goldman Sachs. That's coming out tomorrow morning, and we'll take a look. I think I have some statistics on that. Let's see. Goldman Sachs is mixed in terms of the day it reports, but I think the last time they reported, the stock had a big jump because they blew away street estimates by a crazy amount on trading. Trading is a lot more to Goldman Sachs than the other banks, but nonetheless, they're all just crushing it on deal making, investment banking, and it doesn't seem like there's any slowdown in that. So the point is, the banks have had a breakout on the charts, confirmed by the fundamentals. I think you put those together, I think bank stocks are showing the new leadership. Now, bank stocks don't represent as much in the S&P 500 as tech stocks do, not even close, but it'll help the rest of the market. And if tech stocks do hold up okay, I think that's what sends us to new highs on the major averages. Just so you know, in an index, you cannot invest directly into an index, but you could invest in a security that tracks or mimics an index. have to say that. All right. So what else is going on? So is today a head fake? This big rally in the market? I don't know. I'm not going to sit here and pontificate, and say this is it. We're going straight up into the end of the year. We'll have ups, we'll have downs, but over the long term, we expect the trend to be higher. Is that good enough for you? If that's good enough for you, then congratulations. You have accomplished like 99% of what you need to do to be a good long-term investor. Okay. I think we're heading out here. So yeah, I think that covers everything that I wanted to talk about today. I want to wish you a happy weekend. I'll see you Monday. This week flew by, didn't it? And I thank you so much for watching. If you have any questions that you think of after the show, you could hit me up in the comments, send me a DM, give me a call, what have you. And I want to wish you all a happy weekend coming up. All right, take care. Thank you.